Thank you very much, Mr. Speaker. It's a shame that this debate didn't take place in June instead of October. And I say that because it's taking too long to get in touch with reality. Back in March, when the governor introduced his original tax proposal, it was clear to most Pennsylvanians, most members of this legislature, that that tax proposal was excessive. His spending plan was excessive. It's taken that long, and actually, if my math is correct, this is the third tax proposal that the governor has put forward. I'm glad we're having this vote today because it's clear, and trust me, there has been so much misrepresentation since day one of what goes into these proposals. But today, ladies and gentlemen, and the taxpayers and the working families of Pennsylvania will see, probably for the first time, who's paying the tax bill. 95% of the governor's latest tax proposal will be paid by the working men and women of Pennsylvania. It's that simple. $2.1 billion of the $2.4 billion for the fiscal year 16-17. Same percentage, about 2/3 of that figure for 15-16, because the effective date is October 1st. It's a 16% tax increase on the people that are going to work, the people that file their PA-40s at the end of the year. The second misrepresentation, and I stand here from an area that does not have gas drillers, but boy, I've heard about the gas drillers. I hear about them every week. But let me tell you something. And I've heard my good friend, and he is a good friend, not just for parliamentary purposes, Chairman Markozik, but I have heard for years that Pennsylvania is the only state in the nation that does not have a severance tax on drillers. And I've asked, how many other states in the nation have a local impact fee that generates $220 million? So even today, as we do away with the one misrepresentation that this tax package is not about severance tax for education, we still are trying to mislead the public that we don't tax the gas industry. We do. We do. Let's just be honest with each other. We do. This would be just a second tax on the gas drillers. So don't mislead the public. Don't change it around. Please name another state in the nation that generates $220 million and goes back for infrastructure and environmental concerns where the drilling's taking place. I voted for that tax bill. I support that plan. But don't block it out of the debate like that it doesn't exist. It's there. I've heard for over a year, $1 billion. $1 billion for education. The fiscal note reads quite clear. The fiscal year 15-16, which is what we're supposed to be working on, generates from this new severance tax, an added severance tax, $67 million. I don't have to tell you what percentage of the $1 billion that is. On a full year, it's $389 million. Now, we don't set market prices for gas, but it is what it is. You can't get water from a stone, and you can't get $1 billion from a severance tax. Stop repeating it. Then we can sit down. And I'm telling you what, I'm here to tell you that the property tax proposal that the governor is promoting today is so much better than the one he introduced in March. So much better. But guess what? That was an existing program. It's just an expansion on a good program. But that existing program, there was no tax dollars involved in that. It's from the lottery proceeds and the gaming proceeds. Why aren't we talking about that type of revenue? Does it always have to be taxed? There's other revenue there, ladies and gentlemen. There's revenue out there that other states are taking advantage of that we're not. But instead of filling the holes with non-taxable revenue first, this administration has to tax people first. We're reasonable. We understand structural deficits. We may not agree with your numbers right away, and that's for the bean counters to get together. But give me a break with the misrepresentation. We handled a $4 billion structural deficit. Okay? We didn't run away from it. There's other ways to handle it. I'm still waiting for my first call from a taxpayer that was upset that we transferred money from other state agencies. Now, it's convenient to call it raiding. It sounds good. In political hallways, a raid. It's a transfer. I do it all the time in business. You transfer money from one checking account to another part of your business. It's done all the time. I don't call it raiding. It's a transfer. So please, this is what we're here to vote on today. A 16% tax increase on the personal income tax. It will generate, in this fiscal year, $1.4 billion. I commend the governor for expanding the special tax forgiveness program. I have some ideas on that myself. But every once in a while, we have to increase the benefits for our seniors and for our disabled and for the low income. I applaud the governor. But let's talk about the severance tax, $67 million. Total revenue package for this year, which is our constitutional requirement, $1.383 billion tax increase, of which 95% will be on the working people of Pennsylvania. Make no mistake about that. The following year, they worry about the structural deficit. Last year when I stood here in front of you, we made a projection of revenue. Well, guess what? It was a conservative amount. It came in. 400 million more revenue came in on the same rate of taxes. That's real money. That's real money. Guess what? That takes care of the governor's expansion of that program. Just increase revenue from the existing taxes. You don't always have to raise taxes on the working people and claim you're taxing somebody else. And you are taxing that industry. Please, you are taxing that industry. Please name another state that gets $220 million from that industry and sends it to the counties that are impacted the most. I had a company come into my office just yesterday. A recycling company for all you environmentalists. And guess where they're opening up the plant? A recycling plant in Marcus Hook, Delaware County. On the same facility where Monroe Energy is. A facility that just a couple years ago was closed. And now this recycling company is coming to Delaware County from Oregon, investing $35 million in this facility for recycling because they can recycle the plastics necessary for the refinery that Delta Airlines is using at Monroe Energy. Jobs, investment, taxes. This is what we have to look at. And let me tell you something. Delaware County sends the recycling of plastics to Berks County, where our landfill is. It will not be needed. It will be used in this production, in this refinery. So, you can criticize the massive tax cuts, the massive cuts in education, human services. I just want to remind you, the bill that passed here in June, which was vetoed by the governor in June, increased education funding by over $300 million and increased human services by over $500 million. That's also a fact. That's also reality. Now, you can compare it to something 4 or 5 years ago that had something to do with federal stimulus money, which is too complicated to explain to people. Those that want to raise taxes have a simple message. But sometimes when you're right, you have to go into details and you have to explain what's going on here. It's taken since March to get the sales tax proposal that would have absolutely devastated the taxpayers of Pennsylvania. Since March, 2 weeks ago, that was still on the table. It's now off. And Governor, thank you for taking that proposal off because it had no support in March and has no support in October. And we're not voting on it. I think we're heading in the right direction with our numbers, but there's other ways to pay for things. Take it from a small businessman that knows. Thank you very much, and I ask for a no vote on this 16% tax proposal.